If you're looking for an insanely profitable strategy that is stupidly simple and proven over a long period of time, then stay tuned, because in this video, I'm going to break down my 3-step stupid simple trading strategy. And this isn't just a cherry pick trade. This is an exact trade of an execution taken yesterday following the exact trading plan that's part of this trading strategy. Now, just to prove to you the results, you're looking right now, you can see here that this has been 2023, 2024, and 2025, and still to this day, still the strategy that I go for. And yeah, it's insanely profitable, as you can see by the data. So without further ado, let's kind of jump straight into it. The 3 steps that we're going to discuss here is number 1, direction. We always need to know, first things first, which direction is the market likely to trade in today's session. Secondly, is location, because you can get the direction wrong, but if you get the location wrong, you'll miss the trade or you'll be late to join it. And then thirdly, we have confirmation. This is to make sure that the direction and location are actually what smart money want to move price from. Let's kind of jump in. This is the execution that you're seeing here on screen. And I will just go back right as the New York session is starting, and I'll break this trading strategy down as we go along. So New York session is beginning right now. And the question that you have to ask yourself when you're looking at this market, you can see we're on euro dollar 15-minute time frame, because the 15-minute is the primary time frame that I look for the direction of that day, of that session. So you want to look and you want to come to a conclusion of which direction is price likely to trade in. Now, this is something that I see countless traders get completely wrong over and over again. And this leads to traders trading on the wrong side of the market or missing the idea completely. I can imagine that there are many different traders who see many different things, and that's a big problem. So you can see on one hand, you may be looking at it from the lens of high, lower, low, and we would be bearish. On the other hand, you could be looking at it as high, low, higher low, higher low, and now we're going to go and put in new highs and continue this bullish trend. Both are okay, but the goal with a trading strategy, one that actually works, it's not about being right, it's about having an edge, a statistical edge over price. So what I like to do is I like to use the indicator that I built for myself. And in a click of a button, this will literally tell me my direction for price. So you can see here, market structure, 4-hour bearish, 15-minute bearish. Now you may be wondering, how does it come to these conclusions? And the answer to that is, over the past 5 years of data that I've collected, I've tested various different rules as to what makes something a high, what makes something a low, and how do we actually repeatably and accurately set the definition of the trend. So what you'll see is that here we have a change of character. Price trades higher, we pull back, we have a break of structure. So at this point in time, we're bullish. And then we get a bearish change of character. So when this swing low that put in this swing high gets traded through, that is a change of character. At that point in time, the only thing that I'm interested in on this chart is this high here and this low here. So it is clear and obvious that the direction for this day is bearish. We are expecting lower prices. And it's that simple. It doesn't have to be any more complicated than that. Trading is simple, just made complicated by humans. So number 1 is direction, and our direction is bearish, as you can clearly see here. Not only that, we also have a bearish daily directional bias. So this makes this a high probability setup. Step number 2 is location. So how do we find out our location? So again, inside of my SMC engine indicator, I have these 3 color graded boxes, and they indicate my sessions. So in blue, we have Asia session, in green, we have the London session, and in orange, we have the New York session. And since we are just about to start the New York session at 7 a.m. Eastern Standard Time, for now, we just have blue and green. Now, in any variation, whether I'm trading the London session or I'm trading the New York session, for me, location comes down into 2 parts. Firstly, I need an area of interest. For me, an area of interest is an area of price that we transacted in for a long period of time before definitely breaking out of that level with momentum. That same area that we were transacting in previously becomes an area of interest. And so I expect that if in a bearish trend, we come back into that area, then with the right confirmations, this will be the level that holds. Secondly, off the back of that, I also have session liquidity. So for me, for the London session, I have to see Asia high or Asia low get taken. So Asia being the blue box, you can see time and time again, I'll just show you. In this day, you see Asia low, Asia high. London takes Asia high and then takes Asia low. London, we take Asia low, and then later on that day, we take Asia high. So you'll see time and time again, we take the highs and then we take the lows. You'll see again, we take the lows, then we take the highs. So this is a common pattern. Go and test it for yourself. It plays out extremely well. And so if I know that and I have the data that indicates that the likelihood is that the session highs and lows usually get traded through, then I want to use that to my advantage. So what I do is for the New York session, I combine location, price is sitting in a range. Price is ranging, indecisive, and then we get these heavy aggressive moves. So this becomes an area of interest. Clearly put, it's a supply zone. But we have the London session high right up in here. So what I need to see coming into this session is first and foremost a sweep of the liquidity that sits at this high. So 1, direction, bearish. 2, location is this box, and then I add on liquidity. So I need to see this high taken. So coming into the New York session, the only thing I'm doing is literally waiting to see, can we take out that high? And you can see we can take out that high, and we do take out that high. So when we take this high and we're inside of this area of interest, I go straight to step 3, which is confirmation. Confirmation for me is I want to see price actively show me that the side of the market that I'm trading on is dominating price right here and right now. And so the way that I do that is I drop down to a lower time frame. So notice in here that we have a 15-minute that's bearish, but we have a 1-minute time frame that is bullish. Well, if I drop down the 1-minute time frame, which is what I do, I will look at the structure. And again, it's easy to make human error when doing this. Instead of trying to map it out for myself all the time, I coded my rules into an indicator that does it for me. So I don't have to spend time doing it, and I don't run the risk of being wrong. So you can see here that we are bullish, and we have a swing high, a swing low, a break of structure, a swing high, a swing low, and a break of structure. So the 1-minute time frame is trending bullish, which simply means that at this moment in time right now, buyers are in control. That's it. It's literally stupidly simple. And that's how it should be. And the only way for me to get involved in this price is to see sellers take control. So what do we see? We are bullish, buyers are in control, sellers try to take over, they fail. Buyers continue. Sellers try again. Failure to break the lows. Buyers take back over. So now we see sellers are trying again. But until we take out this level, buyers are still in control. And so literally all I wait for is a change of character to the downside on the 1-minute time frame. And so if we play price, you can see we get close, but we reject it and we start trading higher. And so we want to just wait for that confirmation if we get it. And then you can see we get the confirmation, and we get it with a level of aggression that gives me extra confirmation in this trade idea. Notice that sellers are trying, buyers are trying again, then there's a battle in here. Sellers are pushing, buyers are pushing, sellers are pushing, buyers are pushing, and then out of nowhere, woof, sellers completely take control of price, completely dominate, showing us clear intention. So now we have clear direction for the day. We have clear areas of interest, so we have clear location. And now we have clear confirmation. Now we've shown that sellers are active at this level. And so that for me is the trifecta. That puts all of the pieces together. And if you're sitting at home now and you're thinking, this sounds too good to be true, or this is too easy, that's because trading is supposed to be. So many people get trading wrong. They'll go and find a random strategy on YouTube and try to trade it, not knowing whether it's actually profitable or not, because they don't have the data. Maybe they take a few losses, they go and try and find the next strategy and the next strategy, or they add more concepts. And all you're doing is resetting your learning curve. You're bringing yourself back to zero. You've got to learn something new, add it in, and you're still not going to get the results because you don't know the process. It can be stupid simple because you have the data to prove it. This is 3 years of historical testing on the model. Plus, I have all the data for this year to date as well, which is insanely profitable. It's the literal system that all of my inner circle members are using to take profits consistently like the ones that you're seeing on screen now, because it can be simple, but you need to know what you're doing. And I think something like automation, especially in this day and age, it's extremely powerful. So for me then, it's like, okay, well, where do we go from here? It's the same concept that I used to find the area of interest for the 15-minute. You're looking for an area of interest where price does this and then aggressively moves in one direction. So aggressively moves in one direction. That's it. And that's my area of interest on the lower time frame, because it's just fractal. It's just doing the same thing on a different time frame, because price action is universal. And this is the position. And for me personally, I like to be a little bit safe with my stops. I could arguably put my stops above these highs and have a crazy risk reward. I think it's just a little bit risky. We could easily do this and then trade lower like this. So I like to cover the highs with my stops. Now, as a bonus, one thing is knowing the direction of price. Another thing is knowing the location of where you're gonna look for areas of interest from. Another one is knowing the confirmation. But how do you actually look at your profit taking? Where do you close the trade? And that's another big thing. If you look again at the data, and we just look at the data just for this simple strategy, you can see here that my average win to loss ratio is 6.1. That simply means that for every $1,000 that I risk on a trade, I'm gonna return $6,140. If I lose a trade, lose a trade, lose a trade, lose a trade, win a trade, I'm still immensely profitable. And that comes down to understanding how you actually set your take profit levels. So for me, for example, you can see, again, I use liquidity a lot when it comes to this. So there's three main liquidity areas here. There is the low of London, the low of Asia, and there's previous day's low. Previous day's low being like the grand finale. Now, notice, again, if we just come back a little bit here, again, I have 10 years of data that tells me there's a 75% chance that if the previous day's candle closed bearish below the previous day's candle, there's a 75% chance that we're gonna trade below previous day's low. Verified data, not just random theology. So if I know that information and I can see that the previous day's low hasn't been taken, there's a 75% chance that we're gonna trade through this low. Hello, like you're just playing the numbers games. It's not that difficult. So I know that my end goal, my final target for this trade is gonna be this low. What I don't want to happen is to get tagged into this trade, price starts running, and then all of a sudden comes back and leaves me at break even, and I'm left, holding my trade, or it runs all the way down here and then it comes back and does this. Because again, this is something that has happened to me time and time again. This is why I create these types of rules. And so for me, my fixed rule that is consistent every single time is first things first, we're gonna take profit at a 1 to 5 risk reward, which in this instance also aligns relatively close with Asia session low plus the current day open. So that's gonna be my first take profit. My second take profit is gonna be previous day's low, and that's it. And so now you have clear direction, clear location, clear confirmation, and as a bonus, how do we actually close this trade? Because for one trader, he might take this trade, close it at a 1 to 2 risk reward. But if you can get 5 risk to reward, 7 risk to reward, 8 risk to reward, then why wouldn't you? It's the huge risk to reward that makes trading so much easier, because you can afford to take losses. If you have just a 1 to 2 risk to reward ratio, you have to win so many more trades than if you have a 6 risk to reward ratio. So again, how does this thing play out? If we come in here, you can see we have our change of character. And not only that as well, like if we come back here, you can see here, this box here, which is automated, this is my fair value gap. So inside of the indicator that I use, I just take all the rules that I have for everything smart money concepts, which is direction, order blocks, fair value gaps, and it essentially just does it for me because it's just easier that way. I make less mistakes. So you can see here, there's only one fair value gap available. I have the fair value gap here that's been traded into and away from. Now the only inefficiency is here. So I have this range, sell off, the only fair value gap is here. Again, just an additional confirmation as to why this area is the area that I'm choosing to take my trade from. And so how does things play out? So price tags into the trade immediately and starts running away, which is a good sign. See, we have the fair value gap there, react to it, and we start selling off. Now again, in this instance, we're running nicely, but the first take profit level is all the way down here. So it's just a patience game. And I also want to stress to you the importance of trading psychology as well, because if we look here, you can see that price is running so cleanly. News comes out, and then we start coming back toward the highs. For so many traders that are holding the trade like this, when price is running so cleanly, and then we start coming back, they're so tempted to close the trade with a little bit of profit because they're scared that it's going to come back into this level. You have to trust your analysis, trust your system, because when you have the data for your system, you can actually trust what you're doing. When you don't have the data, when you don't truly have an edge, you can't trust anything because you have nothing to trust. Nothing suggests that what you do is trustworthy unless you have the data and a clear plan for what you're doing. So for me, it's easy for me because I just know my edge. I just allow things to play out because my edge tells me to. And it takes all the workload off me. So by having an edge and by having something like this indicator that just automates your process, removes human error, gives you clear directional bias, gives you clear areas of interest, trading is on easy mode. And I don't say that to give unrealistic expectations. I say it because it's the reality. And so again, we'll just kind of see how price plays out. Price respects our level, begins selling off, And that's our first take profit. The current daily low open is the first take profit, right? Which is 5 risk reward. So now what I'm gonna do is I'm gonna close half of this trade and I'm gonna let the rest of the trade run to these lows. Now, again, psychologically, I am more than okay with holding this trade. If price starts coming back up here, I'm fine, because one, my edge tells me that it's fine, and two, I've already banked profits. I've already taken money off this trade idea. I've already taken money. It makes you feel better. The rest is a bonus, and that's like your kind of outlier performance. And so again, we'll kind of speed things up. You can see we start selling off aggressively, and then what happens? We find a low and we start aggressively reacting toward the buy side. Now, for me, I'm just calm. You keep playing price. At this point, honestly, I'm sleeping anyway. But the next day comes in, which is today's price action. And in today's session, in London session, we're here, and that's the full take profit. And so that's clear direction, clear area of interest, location, clear confirmation, and clear profit taken. And that's the strategy. If you want this indicator for yourself and you want it on your charts, then you can check the link in the description.